Today, we're going to start the session with a conversation with Deepak Gupta, founding partner at WEH Ventures. Deepak is joining us from Mumbai, India. Welcome, Deepak. Great to have you here.
Yes, thank you.
So, Deepak, tell us a bit about yourself as well as WEH Ventures. This is the first time 1Mby1M is meeting you. So, we're eager to find out more about your investment thesis.
Yeah, so basically, I guess I have been part of the venture ecosystem since the last 20 years, but not continuously, off and on. And then in the last 6 or 7 years in the early stage in India, I run a fund called WEH Ventures. We are now on to our second fund as of last year. We do pre-seed to seed investments, which are primarily focused on the Indian market. We have a few which are companies facing overseas but predicated based in India. And yeah, we are fairly sector agnostic. Yeah, I mean, that's a brief introduction. I guess now we are somewhat well known in the market. We've had some early success in the last few years. So,
how big is the fund?
Our fund is almost exactly ₹1 billion, so a little under $15 million. So it is very much a micro sort of VC fund. Yeah.
And what size checks do you write?
So we write checks of anywhere from, I would say, $150,000 to $400,000 to start with.
Okay.
And we are slightly more concentrated, so we will do maybe 15 odd deals from the fund, and therefore we have a decent reserve for at least 1 or 2 follow-on rounds.
So you participate in the follow-ons as well. And you said you do pre-seed to seed, which is consistent with your check sizes. Now, what do you look for in the deals that you choose to invest in? How do you've had quite a bit of success. So what characteristics have you determined that you are ready to write a check?
So I think, it's pretty common, I guess. Every investor has slightly different weightages of certain things. I think we operate in a very lean team, and the 2 partners, and basically we are fairly intuitive in the way we choose to do business. So with the company, I think primarily I would say the majority of the decision, perhaps 50% or more, is the founder, and the remaining big chunk is sort of the market or what it can be. And then there are at times when there is a little bit of market traction and things like that, which obviously helps to take into account. What we try to avoid generally is to take cues from other investors in terms of whether X or Y investor is investing or not. So we try to keep our decision fairly independent, and typically we don't want to know who else is there until we sort of made up our mind. And I think that has also helped us in having a little more conviction when we enter. And yes, it's very simple. I mean, and there are certain times, I guess, you need certain founders where...
Deepak, talk about some of your favorite deals and kind of walk us through in what stage did you encounter this company, the entrepreneur? What did you see in the entrepreneur or the company or the market that really attracted you and made you want to write the check? So let's do maybe 2 or 3 case studies.
Yeah. Let me tell you. So, for example, we have invested in one of the companies we've invested in from our first fund. It's a company called Small Case. And when we looked at them, and this was about 3 years back, 3.5 years back, they had received a small pre-seed check in those days, and they were having, I would say, a little bit of difficulty perhaps attracting capital for the next round. This company essentially was creating baskets of stocks in a passive investing model, a bit like Motif used to do in the US, but the Indian market is and was very different. There was hardly any ETF-like product, and a lot of the fintech investment sort of startups were basically hawking advice on which mutual fund to select. And the participation in the funds was also low and has grown since then. So they were finding some really good success, this company, and the product was very beautiful. And in fact, we stumbled upon them because more keen initially to invest in companies which were similar to Acorns and others, more like savings apps at that time. But somehow we stumbled upon them, and they had an awesome product. They were creating these baskets of stocks through one broker. And as we saw it, within about a week or so, by the second meeting, we said we have to invest in this company. And it ended up being like an in-between round at that time, like a bridge round. And since then, they've raised multiple rounds of funding, and top-tier investors have come in right after we came in. And some of the concerns, I guess, in the minds of institutional investors at that time were that they were attached to only one broker's platform, and they were only a tool for very sort of knowledgeable investors and not a massy tool. And all those have been sort of cast aside to a large degree. They are a mainstream product. Everybody in the Indian sort of financial market knows about them, wants to work with them. They work with almost all the brokers. They have fairly sizable AUM now. And so again, that was like a high conviction thing where we reached out to them while researching around their sector, not necessarily knowing about them upfront. And then when we kind of liked it, we moved quickly to sort of give them our commitment. And of course, even that bridge round turned out to be larger than perhaps was envisaged at that point, because some more interest came in from more established investors. And then we backed them for, I think, all the rounds so far, so about 4 rounds.
Okay.
And we've done this again and again with other companies. So despite not having a huge amount of capital, I think we've tried to sort of, wherever we've had conviction, we've not backed off. And so we've ended up doing 3 to 4 rounds in quite a few companies now.
Is fintech a particular is fintech an area of particular interest for your fund?
So I would say there are 3 or 4 areas where we've sort of done more work. One of them is the whole Indian content space, which began to take shape around 2016, 17, where most Indians actually consume content in their own language. And over time, it is mostly video. So YouTube is like the biggest platform, and that wave started around 2015, 16, and we took some early bets then and have continued to do that. And we've now gotten into gaming, so that's one big piece. The other big piece where we have played is initially we started doing some brands, DTC brands, direct to consumer, because around 3 or 4 years back, that was just about beginning to get some legs in India. Over time, it has become a broader commerce strategy, because commerce has just exploded around the world and in India, emerging markets during COVID. So we've done 2 or 3 sort of non-brand commerce plays in enablers and things like that. The third sector we played in with some frequency is fintech in general. So we've done small case. From a second fund, we did a company called JAR, which is also sort of in a broader related space of savings. They focus more on the middle India in a very simple interface. So we've done some of that. And then we have other sectors, like we've done something in livestock called Animal, which is not necessarily built on an ab initio thesis, but India is the biggest livestock market in the world, and they're solving a very big problem. So we are not completely thesis driven. I would say it's half and half. Half of it is either, I would say, big thesis, but sort of themes or ideas we pick up and sort of chew through and then find something interesting, and half of it is just things that spring up which are exciting and we like them and move quickly.
One of the trends that we see in the Indian small funds is that some of them are exiting their investments into the Series C or Series D into other venture funds. Is that something you are doing? What is your point of view on that style of investing?
Yeah, I mean, that's certainly a path for us, because if we don't, unless we keep investing substantially, in the later rounds, it sometimes doesn't make sense to keep holding a position, because you do get diluted. Also, we have raised funds, many of us and our ilk have raised funds from domestic investors who have typically had a slightly shorter life cycle view on investments, and that is getting gradually sort of lengthened. So we also I would say, subscribe to that. I think the other thing, of course, is that the M&A market in India for the longest time has been quite limited. I would say only in the last 2 or 3 years that some of the bigger startups and now even the incumbents like the Tata Group and other FMCG companies, etc., have begun to actively do M&As with some decent value. So 5 years ago, I don't think there was much M&A happening in any case.
No, the time to exit.
The route was just secondary.
Yeah.
So so we do subscribe to that. This is part of our strategy of exiting, of course, unless we all wait for IPO and things like that, which takes some longer time, typically.
Okay. Deepak, can you share with us a little bit of your overview analysis of the Indian startup ecosystem? You have been off and on, but you have been playing at it for 20 years. How do you synthesize the evolution of the market?
No, so I think if you ask me, even 5-6 years back, would we be where we are today? I could not have contemplated it to that extent. And I think there are 2-3 vectors. Like if you see the quality of the founders, and the quality, by that I don't mean just their inherent quality, but the speed at which they can acquire the skill sets and the networks. Especially in markets like Bangalore and the Delhi region, etc., which are deeper sort of startup markets, and therefore start executing at a very high level very quickly, was never the case. I mean, in the early 2000s, the companies that used to raise venture capital in a very small Indian market were essentially nearly profitable quasi-IP and services companies, which would typically need maybe one injection of capital and then would go IPO, for a few $100 million. And that was probably slightly different from the US, but not too different. And now, of course, it's very different. The other is, of course, the depth of the Indian market. These so-called consumer internet plays. I think when I first looked at the internet subscribers in India early in my career, it was something of the order of 4 million. And now it's like 700-800 million. So that nobody imagined that happened only 2016 onwards with the telecom sort of geo revolution. Right. And of course now the third wave, which is Indian founders sort of directly jumping into global markets or not, very soon from founding, having a global play in mind and having the confidence to sort of make a dent there. So I think those are the good things. What is still developing, I guess, is the capital market part, the M&A market. The IPO market has obviously seen some legs over the last 12 months or so, but I think we'll have to wait for it to season out a little bit. But all showing positive trends. So yeah, one could not have imagined, and I would think over the next 10, 15 years, this will only get bigger, right? So,
yeah.
So I think it's a good time. Of course, some people say it's a bubble, etc. I think it might be from a 1 or 2 year lens perspective, but over a decade, it does sound like, there's so much depth building in this market that it is one of the frontier sort of venture markets in the world for sure.
Definitely. And I think, what you said earlier about the kind of investments that you do, the early pre-seed, seed investment with a small fund, this is a very important piece of the ecosystem, right? There is a lot of these bigger funds, the brand name funds from Silicon Valley have all set up shop in India and so forth, but this is a stage that they don't do. So it's a very important piece of the ecosystem where the fact that we are seeing this bridging of the long exit cycle with some exits into follow-on venture rounds and so forth are creative ways of addressing the issues. So, for entrepreneurs who are listening to this, I would kind of synthesize this conversation by saying that, India is a very robust market right now and a very high potential market, right? The 700, 800 million internet consumers is an incredibly attractive population of customers, but that customer base, a large piece of that customer base is extremely frugal. Their wallet size is very low, so to get wallet share in that market, you really need to have something very compelling, and you need to understand the nuances of that. On the investor side, investors are interested in those markets. In the beginning, the first part of the Indian venture ecosystem, we saw only the first maybe 100 million affluent customer base as the target audience. Now that audience has broadened, but the next phase of that audience needs a different way of servicing. So these are the trends that you may want to look at, and how your venture, your idea fits into that trend is going to determine whether you can achieve investor-entrepreneur fit or not. We stress a lot on investor-entrepreneur fit. And in the case of WEH Ventures and Deepak, what he's saying is that he is willing to write those early checks. And that's a very unique set of investors who are writing these very early checks. And, either you bootstrap or you connect with somebody like Deepak who's willing to write those pre-seed checks. So, and that has its nuances. And so one of the nuances that you should be aware of is if it takes long for your venture to get to exit, then one way to mitigate that circumstance is by having your pre-seed seed investors exit into the Series C, Series D investors. And that's a fine path of kind of dividing your venture journey. Instead of going from 0 to 100 million in 5 to 7 years with one set of VCs, you could split that up into two parts, where you go from, let's say, 0 to maybe 10 million with one set of investors, and then have them exit into the next phase of investors. Did I summarize that well, Deepak? Do you want to add to it?
Yes, you did, but the thing is, the pace of value creation is, at least at the moment, much faster than that. We have had companies hitting the unicorn status within 2 years, 3 years now on a regular cadence in India.
6 months, yes.
Yeah, so it's not that people like us, we are not, our ideal exit is something that returns our fund more than 1x, right? Sometimes 2, 3, 4x. or more. So that's not going to happen at 50 or 100. Of course, we'll take those exits, but we do feel that, they will happen at 500 million, a billion, or even 1.5 billion within 4 to 5 years. It's quite
But
feasible.
not everybody not all entrepreneurs in India are going to become unicorns. See, our audience is a much broader body of entrepreneurs, right? So our mission is 1 million by 1 million. So, I mean, how many unicorns are going to happen? In the world today, there are about 1,000 unicorns.
That is true. But, I would think in a year or so, it is quite possible for us that from a very small portfolio of, say, 20 odd companies, which we would accumulate over the last, so we don't invest at a very rapid rate. We might have 1, maybe 2 unicorns out of that.
Yes, of course.
And of course, it may not happen, but I'm saying it's not implausible the way things are at the moment.
Not at all. But even if you have 1 or 2 unicorns, you have another 18 companies that you will need to find exits for, and that's where having a mitigated strategy.
Absolutely.
Yeah. Okay.
They are also valuable, of course.
Yeah, exactly. And for the entrepreneur, entrepreneur gets one shot. An investor has a portfolio. Entrepreneur gets one shot. So the entrepreneur has to find a success in one shot. So that's why all those other strategies are also important and relevant.
Of course. Absolutely.
All right, Deepak, thank you very much for coming today. Very nice to meet you, and hope we will have a chance to work together from our portfolio to yours.
Yeah, thank you. Thank you for inviting me.